a buying price, a target buy price of $57.78 for Coca Cola, guys. But PepsiCo has actually taken a bigger hit than Coca Cola, guys. PepsiCo here in the orange line, you'll see that is down 8%, guys, compared to Coca Cola, 5% for the year. Now, good day, everyone. My name is Billy. In this channel, I talk about stocks, real estate, finance, and the economy. Today, we're going to take a look at Coca Cola. Is Coca Cola stock dead? Nah, let me get straight to the point. The answer, in my opinion, is no. And here's the reasons why. Why is Coca-Cola stock down? Simple reasons, guys. The interest rate is up. Now, the Federal Reserve signaled that they're going to increase one more time the interest rate. On top of that, we have comments from Walmart CEO saying that based on weight loss treatment, CEO has seen a drop in demand for Coca-Cola and for snack products. However, it is a dividend king. It has been raising the dividends for the last 60 years. However, we have seen the top of Coca-Cola, the top of growth, pretty much. Coca-Cola is in every single market in the world. There is not a country left where Coca-Cola doesn't sell its products. What does this mean? This means that future growth of the company will slow down. Future revenue, future profits will also slow down. It doesn't mean they're not going to be profitable because they do have purchasing power. What it means is that there's not many other markets left to go and increase your profits dramatically. So therefore, the dividend increase will be at a slower pace. If we see, for example, for the past 5 years, the dividend growth is, I think, about 4% or 5%. In the past 10 years is, 5-10%. Now, the dividend growth going forward is set to be around 3.5%. So this is something that also investors are not happy with. So now, put into this, the dividend growth is slowing, interest rate is higher, so therefore it is better options to get some yield at this point. Doesn't mean in the future based on yields. Comments from drugs that are helping people to lose weight, and the changing in the new generation. The new generation is not drinking soda as the older generation is doing. So therefore, all of these comments are having investors worry. However, in my opinion, is Coca-Cola dead? No, it's not dead. Coca-Cola will continue to grow like crazy, meaning Coca-Cola just doesn't sell Coca-Cola. Coca-Cola has plenty of products. For example, here's a list of all the brands or some of the brands that Coca-Cola sells. These brands are not going nowhere. And in the future, for example, if the new generation shift from consuming high sugar products to maybe more healthy products, yeah, Coca-Cola is there. Coca-Cola, for example, has Coca-Cola Zero, net zero rated with no sugar. It has plenty of other products to meet the demand of the new generation. Now, let's see some valuations for Coca-Cola based on my opinion. As you guys can see here, guys, I have 103 shares of Coca-Cola at an average price of $57.80. My current dividend yield on Coca-Cola is 3.18%. Coca-Cola is yielding $1.84 per share at this point, and I am set to receive so far in today's yield $190 per year from Coca-Cola. So far, I have reinvested dividends in Coca-Cola, and I have been able to acquire 3.06 shares of Coca-Cola at an average price of $60.08. Now, price target for Coca-Cola, guys. Most analysts have the price target of $68.50 to $70. Guys, that represents a 28% upside, guys. Now, this makes it very attractive. Now, having that in mind, you will also be locking a 3.44% yield on top of the upside. So far, I started investing in Coca-Cola in 2022. My first dividend was in July 1st, 2022, and ever since then, I have received $272 in dividends so far. However, I have also been able to generate $167 in covered calls. This represents, guys, an extra yield of 2.81% for myself. Therefore, guys, I have generated in 1 year 7.4% yield on my cost, guys. Once again, this is having together all the dividends received plus my option premiums that I collect. Now, based on my valuation, guys, a target buy price of $57.78 for Coca-Cola, guys. Now, how do I get to this, guys? Let's just go real quick. Now, the Graham valuation, I don't think it applies to this. in this case for Coca Cola. However, let's go with a discount cash flow valuation, guys. Based on this, I inputted all of the cash flows from the past 10 years. We were able to determine that the average growth rate is 3.7%. Based on the future cash flow we determined, and we got the terminal value as well, and the present value of future free cash flow. Now, I am basing this valuation that Coca-Cola will grow at least at 6%, terminal or perpetual growth rate at 2.5%, and all of this give us a discount cash flow valuation of $44.65, guys. Now, let's move on here to the dividend discount valuation, guys. Based on the past 5 years of Coca-Cola dividend, guys, and we project that Coca-Cola will grow the dividends at a 3.6%. This gives us a price and intrinsic value based on a dividend discount valuation of $63.48, guys. It's very close to what analysts are predicting. This represents a 19% upside, guys. Now, moving on here to the last valuation, the multiples valuation, guys. We're comparing Coca-Cola to its peers. In this case, will be with PepsiCo, Monster, and Dr. Pepper, guys. The average PE for these stocks is 7.6%, and the median is 26.7, guys. If we multiply this by Coca-Cola's price, guys, we get a multiples valuation of $65.25, representing a 22% upside, guys. Now, usually, when you do these valuations, you want some sort of margin of error or margin of safety. In this case, I believe, in my opinion, that Coca-Cola has been punished enough where the margin of safety in my case is 0. Another thing is that Coca-Cola always trades at a premium, guys. You almost never get the opportunity, besides the pandemic lows, to buy Coca-Cola at a crazy low valuation. Now, based on this, my margin of safety is 0%. Therefore, my target buy price is $57.79, guys. Now, go back here, guys. On top of the potential upside of 20%, guys, you'll also be locking a yield of 3.44%, guys. Let's compare Coca-Cola to its peers, guys. Now, let's move here. Let's put PepsiCo as an example. PepsiCo has actually taken a bigger hit than Coca-Cola, guys. PepsiCo here in the orange line, you see that is down 8%, guys, compared to Coca-Cola, 5% for the year. Now, compared to the S&P 500, of course, the S&P 500 is up 15%, guys. So even based on just the price alone, guys, Coca-Cola is holding up better than Pepsi. Now, a lot of people like to compare it to Pepsi because it's pretty much the only other brand that people buy. However, let's remember something, guys. Pepsi is not a beverage company anymore. Majority of Pepsi's income and profit comes from the snack division. The snack is Frito-Lay's. Frito-Lay's is the company that owns, of course, Frito, Lay's, Doritos, Tostitos, and plenty of other brands that we're familiar with. So in my case, yes, it is pretty much the closest comparable, but at the same time, Pepsi brings its value more from the snack division than the beverage division. But based on that, still, we see that Coca-Cola has held up better than Pepsi. But of course, compared to the S&P 500, we see a 20% difference in this valuation, guys. Now, another thing is, guys, remember, the dividend compounding, it's working at its best with stocks like Coca-Cola. As an example, last year, when I first bought Coca-Cola, I started with 100 shares of Coca-Cola. So therefore, I received $44 in quarter 2 of 2022. And again, $44 in October, $44 in December, a dividend hike in 2023, $46, guys. Again, you see, look at this, $46.32, $46.66, and now we are $47.02, guys. The reasons for this hike in this year alone is I started reinvesting dividends into Coca-Cola. So now we are seeing the compound effect having a play in my portfolio, or at least in the dividends I receive from Coca-Cola, guys. Even Albert Einstein said, guys, compound interest is the 8th wonder of the world. Those who understands it, earns it. Those who don't, pay it, guys. put into perspective when you buy Coca Cola, guys, is the dividend growth and the dividend compounding effect, guys. That doesn't mean you have to put the dividends right back to reinvest in Coca Cola. Maybe you can take those dividends from Coca Cola and invest in Microsoft and invest in any other stocks, guys. Now, based in my opinion, Coca Cola to me is not dead. Now, the last thing we're going to watch in Coca Cola is follow the smart money. What is options? What are options telling us about Coca Cola? What are the big whales and what are the big players telling us based on option sales, guys? Now let's take a look. Now Coca Cola is set to report earnings next week. Now based on the options market right now in Coca Cola, here we see that just in today alone, the volume of Coca Cola, look at this, guys. This here represents more volume to the upside than volume to the downside, guys. Look at this, only 798, 326, 68, 36, 14. Look at the volume in the upside, 3,000, 500, 1,200, 400, 400, 159. Now look at the open interest as well. The open interest is a lot more open interest to the upside than open interest to the downside, guys. Now this doesn't suggest that Coca-Cola will go back to 60, but based on the option plays now, they are suggesting Coca-Cola might be in the $55 to $56 range, guys. So now my question to you guys is, what are you guys doing with Coca-Cola? You guys buying more Coca-Cola, or would you open a position in Coca-Cola? And are you also generating extra income based on premiums? Let me know in the comments below, guys. Now, thanks for watching, guys. Do my big favor, and it means a lot to me. If you like the video, subscribe and share this video, guys. Leave your comments below. Thanks for watching, guys, and bye-bye.